Good morning. Happy Monday. It's Monday Mindset. Hopefully, you guys can hear me here. Let me make sure you are able to hear me. Hope you guys had a good weekend. It was my birthday this weekend. I turned 38 years young, and I'm feeling every bit of it, but I'm feeling great. I told my wife I want to be more healthy at 40 than I want it to be at 20. And there's a difference between being in shape and being healthy. I was having this discussion with some of my sales team this morning. We were just talking about health. And I said, man, I'm in shape, like I work out and stuff like that, but I am not healthy. Health is way more. It's like what you eat, optimizing your sleep, like doing the things that actually make your body thrive. I have not done that. I'm more just lifting and going to the gym. Here, let me make sure you guys can hear sound wise. I want to share with you today how or what you should be tracking in your business, or at least what I track in my business to try to drive success. So let me make sure. 38. Okay, good. You guys can hear me now. All right. So, what should you track as CEO of your business? And the saying goes, you can't improve what you don't measure, right? You can't manage what you don't measure. So tracking and measuring is actually one of the most important fundamental things you can do in business. But it oftentimes, especially when you're just starting out or you're a solopreneur, you're in a service-based business, you're not really good at keeping your data. Think about your CRM right now. Do you have one? Do you keep all your contacts within your CRM? Do you track your amount of dials? Do you track the amount of activity that you're doing? Think about your money. How many of you get to the end of the year and you owe a ton on taxes and your receipts are everywhere, your spend is everywhere, you haven't tracked? And if something's worth doing once, it's worth doing, or if something's good enough to do once, it's worth doing every day. Or I can't even remember that saying. I butchered that saying. There's some saying out there that talks about that. But the idea is, if you're gonna actually do your money right, if you're gonna, do your marketing right, if you're gonna do your sales right, you really have to be tracking this stuff every single day. So what are some of the things that you should be tracking at a high level in your business that then breaks down to the details in each of these categories? And I have kind of a list here that I'll, walk you through that I was quickly walking down. But business in and of itself is really a math equation. So there's this math equation in business that if you can get right, then you can scale your business to the moon because the math doesn't lie and you can just run the math. And what I love about figuring out the math in business is it takes away the emotional uncertainty that happens all the time in business. It takes away I call it's like that creative block almost. It's like you wake up every day, and if you don't know the math of your business, you're constantly going, what do I do today? Like, what do I create today? Do I create content? Do I make some phone calls? Do I have to take care of this client? And you live in the reactive versus the proactive. And your goal as a business owner is to figure out the math of your business so you can wake up every single day, and no matter how you feel emotionally, no matter how you feel physically, you can come in and do the activities that you know you need to do and track the metrics that you need to track in order to make sure you're doing a good job. Like, could you lay your head on the pillow tonight and regardless of the result, know you did a good job? Meaning if you sold no sales today or you serviced no clients or had no good things happen today in terms of the result, do you know if you did a good job or not? Meaning, did you go and put in the work and the activity that will eventually lead to the result and outcome that you want? That's key. That is especially key for all salespeople because sales is so up and down. And at least in our sale for Reminder Media, man, you could go a day or two dialing 200 people over the course of 2-3 days, dialing 400-600 people and get maybe just one deal. And you're thinking, this sucks. I'm terrible. This is horrible. But if you know your math, and you know how many unique dials you're supposed to do and how many people you're supposed to touch throughout a week, you can have confidence and be like, you know what? I'm doing the right thing. The result will come. So first thing that every business needs in order to thrive is leads. Right? The first part of a business that you always got to get right is who is your ideal target audience? Who are the people that you're trying to reach? How do you get them? You can get them as cold as just buying a list, or you can get them as warm as they're actually reaching out to you to get service for the product and service that you're offering, but you need your leads. So you've got to track how many leads are you generating, either daily, weekly, monthly, quarterly. You've got to track how many leads you're generating. And if you tie kind of the resource that you need with the economics, then you have your cost per lead. So you have your leads that you're getting, And then you've got to track your cost per lead, because this is going to be important for you to figure out the economics and the math of your business. So how many leads did you get last week in your business? How many came in? How many are you working right now in your database? So you need to know leads as one of your key defining metrics and be obsessed in tracking that. And if you follow Grant Cardone's and you follow all these sales gurus out there, they've actually leveled up to say marketing is the bigger superpower. So marketing's the bigger superpower than sales. Why? Because you can reach one to many in marketing, where sales usually is just one to one. So you can do one to many in marketing, one to one in sales usually. And so they say marketing is the higher level superpower. The ability to generate leads is what every business wants, is they want this flow of people coming to them. They want a business that attracts versus just having to grind it out, door knocking and cold calling all day long to try to close a deal. You want to try to generate leads of people who are interested, but you need to track how many leads are coming into your business and what's the cost of the lead. Second thing you need to track in your business is what I call the sale. Sales isn't everything, it's the only thing, meaning you have to close the deal because that's where value is exchanged. That's where you get money for your goods and your service. So you need to be tracking how many sales are coming in. And in order to tie it all together, you want to know your conversion of leads to sale. How many leads do I have to work in order to get a sale? And then that gives you your cost of lead, cost of sales. That actually gives you your cost of acquisition. Is it cost me this much to generate a lead? It costs me, or it takes me this many leads to get through in order to get a deal. That means my deal cost me X. And you need to know that number. What is my cost of acquisition of my leads to my deal? And if you hire salespeople under you, which is what I have, then you have something called commissions that you're paying the salesman and salary that you're paying the salesman. So I factor that into my cost of acquisition. So I have my cost to generate the leads, which is marketing. And then I have my cost to actually convert the lead, which is sales. That's the sales army going out there and trying to sell the lead. But I need to know, what is my conversion? How many leads do I have to get through to actually get a deal? But I also need to know my activity. So how many dials does it take? How many emails? How many text messages? Like, what's my activity? And I tend to like to measure the activities that are controllable. So it's really hard to measure activities that are not as controlled, meaning like a social media post is great. You should be doing it. I encourage people to do social media posts, but it's one to many. And not only is it one to many, you don't know who on your list is going to see that social media post. So I prefer not to, as a salesman, wake up every day and go, if I just post 2 times a day on social media, I'll get X amount of deals. You'll maybe eventually get there in your business if you build a big enough brand, but that's few and far between. You should be posting religiously every day to build your brand on social media because you believe it has an effect on your deals. But ultimately, what I like to measure from a sales team perspective is, what is the actual controllable? What is the number of dials I make per day? How many unique contacts, because there's a difference between dials and unique people that you're reaching out to, because you might double dial them. You might call the same person twice in a day. How many unique people do I need to talk to in order to close a deal? And then how many maybe one-to-one emails am I sending? How many one-to-one texts am I sending? This will get you the ability to start understanding, wow, if I just call X amounts of people per day, my statistics show me I will get a deal. Then all of a sudden, your ability to wake up today, no matter how you feel emotionally or physically, it doesn't matter at that point. You can go and execute that play. For instance, I know a caller on our team has to hit 150 unique contacts. So they have to wake up today and hit 150 unique contacts in order to get them the deals that they want, to get them the paycheck that they want. So regardless of how they feel, regardless of the leads that are in their queue, regardless of all the noise and nuance and narratives that we want to make up, just wake up today and call 150 unique people. And just by the law of averages and the statistics and the quality of the leads that we're bringing in, you're going to close the amount of deals that you need. Now, if you aren't doing the script appropriately, so that's another aspect of the sale. If you're not saying the right words, maybe you got a different problem. So that's the third thing that I tend to measure is you have, okay, how many deals am I getting per day? What is my activity to get those deals? And then what is the language or the scripting that I'm using to get those deals? Now, I was for years and years and years an essence-based sales teacher, meaning I believed it's the essence of the sale, not the language, not the scripting. It's the essence, not the scripting. You got to understand the essence because you might speak a little differently than me, and you got to be authentic and all this stuff. And I believe that the ultimate salespeople, they can do their own thing because they have the talent. But for the majority of salespeople out there, you are better off getting a script that works and repeating that script over and over and over and over and over and over and over again. It's almost like the fundamentals of basketball, fundamentals of football. It's like keep doing the script and you will have more success in the long run. Even though it looks like you might be losing in the short run, you'll have a longer success or you'll have better success in the long run forcing people onto the script. That is just what I am learning in my years of growing sales teams. Is like, wow, I've got to measure how many deals are coming in. I've got to measure their activity and hold them to the activity. And I have to measure the words that they're saying in order to really, really be successful and refined. So that's what I look at from a sales perspective. After sales, then I want to track revenue coming in the door, right? So if I generate leads and I close deals, revenue should then follow. Some people have a delayed revenue model. I do. So I sign somebody up. Maybe they pay a setup fee right away, but I have to wait for them to print. I have to wait for them to use the marketing. So I have a delayed revenue model. So I have to track revenue coming in the door in order to make sure that the money's actually happening and sales are going through. Maybe in insurance, it's like, you don't want people signing up and then not actually going through with their policy and you're getting a chargeback or something like that. After revenue, you want to actually look at where you're actually spending the money. So that's your expenses. So you want to look at that and know where every dollar is being spent. This will help you on your taxes. So count the pennies, the dollars will take care of themselves. Meaning if you focus on the minute details and count every penny, you'll realize that it's way easier for the dollars to take care of themselves because it's really obvious when a big check hits. You track that, you know that. What kills you more is that little $10 charge, that little $5 charge that you just ignore because you're not paying attention. Most successful people that I have come into contact with running businesses, they tend to check that stuff every single day. They tend to look at it every day. If you have leverage in your business and you're able to hire a CFO or a VP of finance, they'll check it every single day for you and can give you the highlights. But you should be in your QuickBooks, in your accounting software, your bank account every single day, because what happens is it's so easy in the day to get into your bank account or your QuickBooks account and go, okay, here's a Starbucks charge, here's a McDonald's charge, here's a Netflix charge. In the moment, here's gas. What was I doing? Oh, I was driving to a client's house. What was I doing here? It's so much easier in the day to mark that stuff. If you wait even till the end of the week, good luck. I just see so many entrepreneurs and so many business people fail because they fail to do the habit every single day, and then it piles up. And you know this to be true because you've probably experienced this yourself. All right. After you track expenses, you got to track your profit, right? Because it doesn't matter what revenue you make. It matters what you take home. And this is the biggest trap every salesperson, every entrepreneur, business owner tends to fall into because revenue is ego-driven in a way. Profit is really the key. Like I would rather have a $30 million business making more than a $70 million business, right? Making less. So you've got to focus on the profit. And in every single business, what I have found is that it tends to be a hockey stick from a growth perspective. So a lot of times as you are growing a business from a profit standpoint is you will dip in profit from an investment standpoint in order to grow. So it will go, hey, I've made it to here. Now I have to dip a little bit, invest in the company to grow back up. That is what I have found to be true in my experience. If you have not found that to be true, lucky you. You have it easier than I do. And then last but not least, I shouldn't say last but not least. There's two more things I would probably track. I would track a retention, and I would track retention of clients, and almost all of this could be associated also to people. So I would track retention of clients and retention of people, like your team members. But I would also, I didn't mention this, from a lead standpoint, how many applicants are you getting into your business a year? From a people resource standpoint, what's your conversion on those applicants, right? What's your cost in order to hire a person? It all applies. It's the same funnel to recruiting, but you want to track your retention of clients and your retention of people because that plays into the most important metric, which is your lifetime value. So how much do you make off of an actual client? for the lifetime that you have them. Now, it's very hard to track lifetime value because maybe you haven't lived the whole lifespan of a client yet, especially if you're an early business, right? So how much money do I make off of a client? Because Reminder Media, we've been in business 20 years. So we have clients that have been with us for 20 years. So that plays into the average. And so what we tend to do here is, yes, you have your overall lifetime value, because you can look at the average or the median and see kind of all of our clients of all time in history, here's what an average client makes us. But what's better and more effective for us is we like to look at the 12-month and the 24-month LTV. So I like to run the business going, hey, within 24 months, we will make X amount. And a good ratio for people is if you can make a 4 to 1. So for every dollar you spend in CAC, so cost of acquisition, you are making $4 in LTV. That's a great ratio. The best businesses, I think, what was the example Alex Hormozi used? I think it was Starbucks one time made like 14x. So it's like 14 to 1. Every dollar that was spent, they make 14 more dollars. And so obviously the better businesses are the ones that have a higher CAC to LTV ratio. But a good rule of thumb is you should at least try to be at a 4. If you're down in the 3 to 2 range, it's low. It doesn't mean you can't have a good business. It just means that you're a lot more susceptible to losing money by something changing in your business. Maybe you generate all your leads off of Facebook, and all of a sudden Facebook's algorithm changes and cost of leads skyrockets, and because you don't have a great buffer in your CAC to LTV, all of a sudden you're making no money, or you're losing money. And so that's the danger. It's not like all of us, if we could put $1 million in and get $2 million out, we would do that. So a 1 to 2, I would do all day long. So what's the problem, Luke, with the 1 to 2? Technically, there is no problem, except that business is weaker or more susceptible to, well, if something happens metric-wise in this business, a cost, like for instance, right, for us, we're heavy print, right? So if postage goes up, which every year the post office is like raising prices of postage by like 10% every 6 months. So if that goes up, that eats in, that cost of goods eats in. And if you don't have enough buffer there in your CAC to LTV, all of a sudden you're making no money as a business, and you might be losing money. So I like to get higher. That's why I say 4 to 1, because you have at least a buffer there, and you can have money to reinvest back into the business and feel confident. So a lot of data thrown at you. My main goal with this is Monday Mindset. So I want to help you get your mind right? So you can go win with your marketing, with your money. And ultimately, I see so many people, what happens to them is they just move through their business with lack of intention, with lack of proactivity, with lack of planning. And that usually stems from they haven't tracked and measured their numbers. And because they're not tracking and measuring their numbers, they don't know what to fix. The beautiful thing about tracking is it tells you what you're doing wrong. If you get on the scale every single day, I guarantee you will do a better job at losing weight than if you only get on the scale once a quarter. What you track, you tend to manage. What you measure, you tend to manage, and then you can improve what you manage. And so I would encourage you, track your leads, track your sales, track your revenue, track your expenses, track your profit, track your LTV. All the gurus out there are saying this. You can find this on Alex Hormozi. You can find this on Dan Martell. You can find this with Grant Cardone. You can find this with Patrick Bet-David. Every single one of them, when it comes down to the brass tacks of business, they all know, and these are the videos they're shooting, because ultimately our emotions tend to go like this. But if we can have the math that we have to run every single day, it doesn't matter what's happening. It doesn't matter what comes at you, because man, I got to wake up today and I got to call 150 unique people. And if I do that, then I'll get the sales that I need. And so that's just for my salesmen, but then it translates everywhere throughout the cycle. And you can think each of these, now I can dive in and go, wow, here's how many leads I'm generating. Why am I not generating more? Well, where are my leads coming from? Those are my campaigns. How am I getting those leads? Are there other avenues to create leads? What's my CPL, my cost per lead? So I can get down deep. The same could be said for every one of these categories. And I can figure out where is the water? Imagine the water of business flowing through the pipe. Where is the water getting stopped? What blockage in the pipe do I need to clear out in order for the water to keep flowing through my business, in order for me to actually get to where I want to go? And so you just got to step back for a second and simplify what you're trying to do, and that will help you tremendously. So I hope you guys have a great week. Appreciate you tuning in as always and watching this Monday Mindset. Let's go make it happen. Get out there and win for you, for your clients, for your family. Appreciate you guys. Oh, and if you're going to be at the Annuity Producers Conference, if you made it to the end and you're going to be at Rory Snor's conference, I will be there. We should connect. Appreciate you guys watching. So if you are in Medicare or you're looking to sell annuities, don't miss Rory's conference. He's the best in the business at this stuff, and he has a great conference happening down in Texas. So check it out. See you guys.